Right.
Yeah. So I do, I've written consistently that the epicenter of the next credit crisis is going to be, in the private equity, private credit. And I've also pointed out, I think I published this, 2 weeks ago. If you look at what's going on in corporate loans, and I'm distinguishing corporate loans from commercial real estate. Corporate loans, the non-performing assets in the corporate loan sector in the banking system have gone up consistently quarter over quarter for the last 5 quarters in a row. And the banking system, in my mind, is better shape than the private equity. So if the banking system is seeing that stress, then the private equity is worse. In addition, the other thing I look at in terms of corporate loans is inflows versus cures. Inflows are what is adding to your bucket of problem loans. Cures are how you reduce that bucket of problem loans, either because you get paid down, paid off, or you restructure the loan and it's returned to performing status. If
Yeah.
inflows are outstripping cures, that says the system is still deteriorating. And we've
Yeah.
seen multiple quarters now where inflows are outstripping cures. So the corporate credit stress is still building. And there are other indicators, but I don't want to belabor this theme.
Okay. A lot of good stuff there. A lot of good stuff to think about, Charlie.
Yeah, I mean, it's just not the time to step up. I mean, could we see 6,000 on the S&P, and in that environment, bank stocks are just, my answer to that question, could we see 6,000 on the S&P by June? Yes, we could. And
Hmm.
bank stocks are just not a place to be if that's the case. And particularly, these large cap, capital markets banks, because there's so much optimism that, we were going to have huge IPOs, huge M&A. Well, if you get a volatile, capital markets environment, it's going to be hard to execute on those pipelines, even if they're there. So, the Morgan Stanleys, the Goldman Sachs, the JP Morgans, they're all being taken down today because of that uncertainty about the stability of capital markets.
Hmm.
The
Excellent.
if you wanted one piece of good news that's forthcoming, it's by the end of this month, we will have the regulators ruling on new, what we call Basel III capital rules, as well as new GSIB. GSIB means globally systemic important banks, capital rules. I've been writing what I believe is peak optimism in ahead of those rules. In other words, we know what those rules generally are going to be, and that's been built into models and expectations. But there will be capital relief in the combination of those two rules when they get published at the end of this month. But I think
Okay.
that was in the stocks at least 2 weeks ago.
For
We'll see
sure.
what happens in the next 2 weeks.
Well, a lot of good strategic stuff there to think about for our subscribers and viewers.
Yeah.
On the Robert Marson contribution front, I'm not going to be as grand in my in my 5 minutes of presentation here. I'm just going to share a stock. I'm basically a bottoms up stock picker, and I did buy a stock yesterday and today. I shared the idea yesterday without sharing the ticker symbol, so I'm going to reveal that today. The company is called LSI Industries. The ticker is LYTS. It's a $19 stock today, and they have a very unique business in the U.S. When you go into a convenience store, or you go into a gas station, or you go into a Pet Boys, you see lots of, or even a Whole Foods, you see lots of display systems and graphics packages and lighting and customized serving equipment to get your slushy or your coffee or your hot bagel that's been pre-packaged at the counter or the counter itself. And that's what they do. They make all this neat stuff that is not going to be affected by AI or by China, because China doesn't have this business. So it's a company that is basically rolling up the the specialty retail outlet, capital equipment business in a way, because that's how these guys create their revenues. They display and sell food products or petroleum products or those kinds of specialty retail outlets that, and they make the lighting, they make the boards, the electronic menu boards at the McDonald's, those kinds of things. So it's a niche business, but it's a very large business. And there's not a publicly traded company that's ever really gotten involved in this in a major way. It's a lot of private companies, a lot of family companies, a lot of 50 and $100 million businesses. And these guys are going for the global roll up play where their customers, the Exxons and the Wawas, they don't want to deal with 13 vendors to assemble one of these outlets or refurbish one of these stores. So these guys are trying to accumulate all the pieces in a convenience store, from lighting to checkout to display to packaging these products, and they want to sort of go from a few $100 million company a few years ago to $1 billion company in the next couple of years.